Good afternoon, everybody. My name is Steve Olson here with the Peak Group. We'll go ahead and get started. We committed we'd start this thing at 1 o'clock Central. I think we can have y'all out of here within the next 30 minutes or so. I would encourage you to, you can post your questions in the chat. I'll do my best to manage people kind of coming in and out. I really got to get somebody to do that for me one of these days. But in the meantime, we'll go ahead and get started. I do appreciate you joining. I'm going to talk about some great stuff today. And I do, just typically we want to go through some high level stuff. You're here to talk about our Class A townhomes in a fantastic market, the Nashville, Tennessee market. Brand new Class A townhomes. These are a little different than what we typically do. And I'm a big believer that, real estate isn't a one size fits all. There's a lot of different asset classes and markets, and, we should certainly diversify. And I'll make a good case for you on that today. So, yeah, thank you again for joining. Here's our disclaimer. Welcome to 2026. Actually, it's been this way for 40 years where the lawyers get their hands on everything. We have to disclaim it. Essentially, right, this is an investment and you're a big boy or girl. You're going to do your due diligence and you understand markets and can and do change and that things happen. So that's the disclaimer. And you know what? I'm going to add one to it. My apologies if it gets a little noisy in here. Um, there is construction going on about 10 feet from where I sit right now, and it's kind of beyond my control. So I think it should be fine. I don't think that you're going to pick up any racket, but you never know. So that's my other my other disclaimer before we really get going. So we always like to talk about just a quick summary of what else we're up to. And this isn't all of it, right? But I've got a couple just to remind you because like I said, there's a lot of different ways to invest in real estate, different asset classes, different markets and strategies. If you are an investor who likes new construction and you're looking for a low cost entry point, I think Birmingham, Alabama does not get the love that it should get, right? And we've got new infill homes we build there. We own our own general contracting firm and property management company in Birmingham. And so that's what we do is we just grab these lots in the suburbs. I don't love Birmingham proper, but the suburbs, especially to the west, we really do. Places like Pleasant Grove and Concord, right? You're only 20 minutes to downtown Birmingham, which is where UAB is. Tons of employment, but there's employment all over the metro. We've got two of these available right now. There's two more on the way. And like I told you, Birmingham doesn't get the respect it deserves. It has a 2.2% unemployment rate. That is the second lowest unemployment rate in the entire country, right? The job market in Birmingham is very healthy. And the latest census data, I don't know how they do that. It really lags. I had a person from the census really just beating down my door a few years ago. They wanted to count how many people were in my house. But so how they release that is inefficient. But in the latest one I found available, you had a 6% population growth between 2022 and I've got a typo there. I just realized not 2203. That would be a terrible growth rate. But you get what I mean, 2022 through 2023. And really, single family homes are just very affordable. We sell them at 265 and they're your classic American home, right? We value engineered them to be good for tenants, but easy to build. They're 3 beds, 2 baths. They've got 1549 on the square footage. And I cannot understate enough the importance of that two-car garage when you're building out in the suburbs, especially if it comes with a driveway. And that's what we've got. You see that home right there. It is available if you're looking for a low entry point on a brand new home, a 6% cap rate. There is a tenant in place already. We just signed them at $18.50 a month. And we've got 5 points wrapped into the price to get your interest rate down. You could apply it elsewhere, maybe some property management credits, closing credits, and that's something that one of our advisors would be more than happy to talk to you about. So, like I said, doesn't get the respect it deserves for the market with the second lowest unemployment rate in the entire country. You got to love that. Some of you may have joined us a couple of weeks ago, right? This is a completely different product than building single family homes in the suburbs. I mean, these are new build duplexes in the core of Fort Worth, Texas, right? We're 5 miles from downtown Fort Worth. We're 4 miles from Medical City. It's a giant hospital complex that employs a lot of people. We've got four of these that should be complete any day now. I was there a couple of weeks ago and saw for myself. DFW, Dallas Fort Worth, is projected to outgrow Chicago as the third biggest metro in the country within sometime in the early 2030s, so 5, 6 years from now. So it's currently the third fastest growing metro in the entire US. So we certainly love to see that. The duplexes are low cost, and these are a totally different animal when it comes to construction, right? We're building in that core of Fort Worth. So these people, you're not typically leasing to families. So we build these smaller, they're 2 bedroom units with 1 car garages. They do have the driveways, but 389 for a brand new duplex. I mean, it has to be the lowest cost new property in the entire metro, not particularly close. And we offer those at a 6.2 cap rate, contingent on that tenant placement. We'll share all the details on the tenant with you. And we've got a great interest rate incentive. We buy that rate down. For those of you who use our conventional lender, JT Lindsay, we get you down to a 4.99% interest rate. So we're almost to what you came for today, but we just love to talk about that. And we've got something exciting brewing. It's been going for a long time. Some of you have heard me say before that, Peak, we operated as a REIT for a while, and doing so made contact with some great builders, some great regional builders. And that's how we got into Birmingham. We own that construction crew there and the management crew there. And there's one we've been working on for a long time. And I think we will do a webinar on this in 2 weeks. But we're looking forward to offering product in Savannah, Georgia. An excellent market, a giant port there, great regional economy, military, logistics, all that kind of stuff. And I think we can roll out homes pretty close to what we can roll them out for in Alabama. So watch your email. We'll be doing an introductory webinar about Savannah, and we're going to be rolling out 7 single-family homes there to start with more right on their heels. So thank you for indulging the, kind of what we have going on right now. Let's get to what you came for, right? We love Nashville, Tennessee. Love it so much. I was out there house shopping with my wife last week. I'll be relocating to the market. We need a presence there. And with everything that Peak is starting to expand into the Southeast region and up into the Midwest, it's a good central location. We're looking at neighborhoods via a joint venture builder that we have out there that we work closely with, and we will eventually, build our own product in that market. But neighborhoods like East Nashville, Madison, and Murfreesboro is where we are initially starting. And so let's talk a little bit about the area. I am featuring just one of these projects today. These are Class A townhomes. We're looking specifically at East Nashville today. This community is called the Taylor. You see a little map here, right, where my mouse is hovering. That is downtown Nashville. I'll get into this later, but this is a metro with very interesting topography that limits what you can do development-wise, and that puts good pressure on the valuations in Nashville. So the Taylor's up here. This is considered East Nashville, right? You see that's the Cumberland River. When we cross over the bridge and we get into that's that East Nashville area. You come up further, you get into Madison and things. So it's kind of known as a gentrifying area. There's a lot of new restaurants. A lot of that restaurant scene is in East Nashville. One thing I really love, you are 5.7 miles on the dot to downtown Nashville, right here from the Taylor. And that's a big deal because the traffic in Nashville is absolutely awful, right? It's been growing so much that having proximity and convenience certainly matters to your tenants and to your long-term valuation. And what we have that's great is, you want to stay away from the freeways, right? Because of traffic, you can take the Dickerson Pike straight down, right? We're probably 400 or 500 feet off of Dickerson Pike, and you just head right down into downtown Nashville and right down into some exciting new development that is going to be changing things a lot that we'll talk about in just a minute. Let's zoom in. I like to kind of create these maps and geek out on this stuff a little bit. Maybe my graphic design skills leave something to be desired. But what we've done now is we've zoomed in on a 5-mile radius to where this project is located, right? Right here. So boom, there's the Dickerson. Oh, Sorry, my slides got away from me. There's the Dickerson Pike right here. And you can see some notable employers and some notable things in the area. Down here in the bottom left, that's downtown. You can see that V I have in the very bottom corner. I don't want to mislead. That's Vanderbilt University. And no, it's not right there. It's about 10 miles beyond, right? That's kind of on the more western, southern side of Nashville. Giant, well-known university, huge medical presence, and not to mention Oracle down here that's going to be going along the east bank of the Cumberland River. We'll talk about that more in a minute, but you want your groceries, you want your food, you want your hospitals, you want your large employers that some of them are noted there. There are plenty more, but you can see off to the right, this is like pure residential, right? You're not in a booming commercial area. It is residential, but your freeway access and your highway access gets you to all those commercial points that you need to as a tenant. So there you have it. This is an overlay of the community. We've been working with the builder on those townhomes. Now, here's something that a lot of investors really like because at Peak, we're a builder, right? We do a lot of these build for rent communities. This is designed to be for you, the investor who says, I don't want to own a property in a community that is a bunch of other investors, right? There could be pros and cons to that. This community, the Taylor, when it's all said and done, is likely to be at least 90% homeowners and owner occupants, right? So you get to be one of the few rentals in the neighborhood and benefit from some of that pride of ownership that can happen. And a big reason for it is it's difficult to make townhome rentals work in this part of town. The dirt is expensive, right? It's very proximate to downtown. And so it's tough. A lot of times on build for rent communities, you got to go into an opportunity zone. You got to go into the surrounding suburbs and push way out. This is not that. Like I said, you're right in the heart of the action. And we've got 3 of these available right now. There's more on the way. I will give you the details at the end of the webinar on how you can contact us and get that information, pro formas. We have it all. And I would certainly characterize this as a Class A development, right? There's a beautiful monument sign and entryway with an excellent model home that I've been through. I'd be happy to send you the video. And you can see over there, there's a planned pool and clubhouse. They've got it fenced up with a little bit of dirt moving right now. They anticipate that being completed sometime in 2026. So certainly Class A, and it warrants it given the location. Let's talk a little bit about the market itself and why you should care, right? There's lots of good markets out there. We're in a bunch of them. But there are some notable facts that I think certainly matter. And we mentioned Birmingham earlier. Birmingham is a strong cash flow market. Nashville is not, right? Now, if you can get cash flow and you're in a good neighborhood, I think you absolutely green light that thing. But you're likely to see more and more gains in values, right? It's the 5th fastest growing metro in the USA. And it has a very diverse recession resistant job base where there's a lot of healthcare, higher ed, government, logistics, tech, and who can forget the entertainment? It's one of the probably ranks second to Vegas when it comes to entertainment in the United States. And that's a huge industry there. A lot of corporations moving to Nashville as the general trend of big companies leaving high tax, high regulated coastal states for the Sun Belt. Nashville is the poster child for what is happening there. It is a landlord-friendly environment. And I mean that for 2 reasons. We love ourselves some Texas, right? We're based in Texas. And I always say 2 things can be true at once. Texas is one of the fastest growing markets, and the property taxes are a problem, right? And so we have to be very strategic there. Not necessarily so in Nashville. The property taxes are quite low, and they have a very efficient eviction process, right? Like many of those Sunbelt states do. And it is inherently supply constrained. 2 reasons. The topography is unique, right? As you get a little bit north and west, right, the slope becomes extremely difficult to build on. There is very little that is located in those areas. That's why you see East Nashville grow so well, because it's a little flatter there. That's why you see development pushing southward in Davidson County and into neighboring, Rutherford and Williamson County, those are 2 places that are just blowing up as well. But you also have some utility constraint. Some of these surrounding towns just simply do not have the utility capacity to keep approving new permits for residential or commercial. It's a problem. And what does that do to existing values? And you remember, when you're dealing with utility constraints, that is not a train that you turn around quickly. This takes a long, long, long time, a very big political consensus that has to be built, and it's difficult. So, with topography and utility constraints, we make the case that this is a market that will continue to grow. I think it certainly, when COVID-19 hit, remember that? That was the worst, wasn't it? But COVID came around and we saw just massive appreciation in many Sunbelt and Western markets. And so, in a way, we've kind of pulled that demand forward in some places that have plateaued or even declined slightly. And I think that, Nashville has done a little bit of that too. That eventually passes, and the topography, the utility constraints, the growth rate, the employment, all of those take hold and do what they usually do. They increase values. That's my case for it. You can believe it or not. A couple of big moves that are notable that are being made. I mentioned earlier the giant multifamily real estate developer Trammell Crow, based in Dallas. They're now opening a Nashville office. You can go ahead and Google it, read their reasoning why, but in short, it's a world-class destination, right? Much of the country looks to it on for leadership in a lot of development and a lot of different industries. What a place. It has certainly changed over the years, and Trammell Crow wants to be a part of it. And in addition, Oracle is building a massive campus on the east bank of the Cumberland River. That's what I showed you on the map a couple of slides back, is that construction that will be starting. It's taken a while. They're going through all the city stuff. City is cooperating, wants it, but even when a city cooperates and wants something, they still do something 100 times slower than you or I would, for good or for bad. But that we're talking apartments, mixed use, new Oracle campus. The headquarters will be there. And it's just so fitting with Nashville being kind of a southern hub for tech, but especially healthcare administration. So much of the billing and insurance and healthcare administration all traces back to Nashville. It's one of the biggest businesses that there is. And one thing I really like about that when it comes to healthcare, we're all going to need it, right? We're all going to need it eventually. So we'll keep going, and that's why we like the market, right? Some of the things that are happening, those stats about in-migration and employment, and it's landlord friendly, and those constraints on future development, right? They say about real estate, they're not making any more of it, and that is especially true in Nashville. Why don't we talk a minute about the specific opportunity in these 3 units? And there are more on the way, so don't panic if this doesn't fit your timing. We certainly have more units coming, and I'll give a few details on that a little bit later here. So here's a shot. This is the community. We're talking 1,800 square foot units, 3 beds, 3.5 baths, 2 car garages, and they're beautiful units. I'll get into this in a minute, but one thing I really like is when we do a build for rent community at the Peak Group, there's a lot you have to do with engineering and architecture to value engineer these things to make sense, right? But this community was conceived on the fact that it was going to be owned by owner occupants. So you're getting a retail spec level. You're getting very, very nice units for the price compared to a traditional build for rent product, right? Rents are high, like I said, because of that proximity, and this has been validated by our property management JV that we have in the area, and they've successfully rented a number of these at this price at $3,000 a month. I want to add, those of you that have spoken with me before on build for rent communities that are townhouse style, HOA dues initially look very high, right? You go, oh, wow, what's that? Really, it's just moving some of your expenses from column A to column B. And most notably, your master insurance policy is included in those HOA dues. All of the exterior maintenance of your property, including the roof, is included in those, right? They have reserves to handle those kind of things. And that protects the value. That means that nobody can let their townhome degrade in quality on the exterior. The HOA is going to maintain that and maintain the integrity of the community that way. Then, low property tax in Nashville, you're probably going to be, in the mid 2000s for property tax on these. So you can see where your NOI pencils out and where it begins to make sense because it's so hard to cash flow on a class A property in a tier one market like this is we get that to a 5.2 cap rate, but we've been able to get the builder that we've JV'd with on this to go with the 4.99 interest rate. And it's not a gimmicky 4.99 interest rate. I hear a lot of people promote properties, and once you kind of unpack that, you realize, oh, it's an ARM, it starts adjusting after 2 years or the first year, or there's some other fine print. But that is a bona fide 30-year fixed rate mortgage at 4.99. And in this economy, that is cheap money on great rent in a market that is likely to continue to see growth moving forward. So we're pretty excited about that. Those are the high level financials. And like I told you, the market, this location, we have some lower cost options. I mean, you're going to be in the mid fours to own in this neighborhood. That's how good of a market it is. You can kind of see some concept here, right, of what the community will eventually look like. Some of the pictures I showed you, you're entering from right here, okay, where my mouse is. This is like where the builder's model home is. We've got the amenities through here, and the townhomes that are getting sold to owner occupants and to some of our investors are this row right here in the top. And then the builder will just continue moving down these rows to complete the community. And this clubhouse and pool area, they anticipate completion in 2026. Up to the right, you can see that is the entry. So right here, that's where we are looking that way on this picture. That's the Taylor. Great community. I was there recently. And I think you'll really like the interior finishes as well. Let me show you some of them, right? Now, granted, this is the model. All builders do this. They upgrade the model to the nines, right? And you think that's what I'm getting. But the cool thing is even on their basic spec level that most investors are going to want, you're still getting those quartz counters, higher quality cabinets. You're getting that dual primary bathroom vanity. I just continue to hear that from tenants. They want space in the bathroom. They want space in the kitchen. And at over 1,800 square feet, these units certainly deliver that. So in short, those are above quality finishes. And so our management team that's on call to handle all this stuff loves it because it's high quality. You're going to generate high quality tenants that are going to stay for a long time in these units. We've got more on the way, right? You can see here, we just talked about East Nashville, but north of there's a community called Madison. We kind of go from that A neighborhood. This is more of a B neighborhood, Madison is, but they're fully detached. They look like townhomes. You could smush them together, but these are fully detached homes. You can get into those for the mid threes, and the incentives all hold. We still offer the 4.99% interest rate. So if you'd like more information on that community up there in Madison, let us know. That's the top picture that you see. And then going down into Murfreesboro, that corridor, I-24, heading down to the southeast side of the state, down towards Atlanta, down towards Alabama, is Murfreesboro, a community that is just growing like crazy, right? Last I checked, they have at least 500,000 people down in that Murfreesboro area. It's essentially absorbed as part of the Nashville metro, but that traffic up and down 24 is crazy because the two areas are just growing together. So you can get some lower cost into the low threes townhomes in the Murfreesboro area, and just email us. So we'll give you the info in just a minute about how to do that and how to get access to that information. So in short, we've got 3 units in the Taylor right now. You can contact us at invest@thepeak.group. There's our phone number, right? Many of you heard about us through an email. You can certainly respond to that. I had an investor say that the timing wasn't right for him, but he was looking for at least 4 of these. And what's great is the builder is amenable to getting with us on schedule. And I think we're probably going to reserve just a fourplex. It's not technically platted as a fourplex, but it's 4 units in one building. And I think he's going to put a deposit on that whole building. So we can look out into future phases and plan around what your timing looks like financially for those. And you can lock up other units in spite of the 3 that we have available there. And as we get into that, as we get into your goals, what you're looking for on financing and timing, we can certainly recommend other options. For example, I'm refinancing a duplex that I own right now. And it's taking me a lot to get there because I bought that thing and got a rate at 4.5% on that duplex. But my new rate is going to be 6.375. And you're saying, why would you do that? You're a maniac. Well, the reason is that duplex has gone up $100,000 in value. And so I've worked with our lender partner, JT, on, just tuning that up to get that debt equity out of the property and redeployed. I could borrow more against that duplex, but we've borrowed up to the point where I'm still going to have positive cash flow of about 250 a unit per month on that thing, but I get to extract a bunch of proceeds and go do more investments, go get more cash flow, go get more tax benefits, all of it together. So we'd love to help talk through that with you if you have existing properties. Is it time to sell? Is it time to refi? And if you do, what can you do with that cash? What assets do we have that would, increase the amount of real estate that you own and increase the cash flow that you're getting? And we'll facilitate it all for you, front to back. I own properties like this myself. Our management team uses the Appfolio software, and every month I get my statement. I look at, what were my expenses? There was a, leaky toilet for, $75 or whatever. And I check and make sure I got my deposits. And I'm telling you, front to back, it was less than 5 minutes for me as a direct investor to kind of oversee and supervise the portfolio. And granted, there are months where maybe I need to do a call with the manager, maybe something a little more complicated pops up, but you're not the one doing the heavy lifting on it, which is great. So we facilitate all of that from front to back. So you can email us at invest@thepeak.group, call us, or reply on the message that we had sent out a little bit earlier for how this works. So with that, I got a couple of questions emailed beforehand, and I see one that came through in the chat as well. And we're about wrapped up, but we'll deal with those. And Mahesh, it's good to see you. Good to have you back. Mahesh asked, okay, I joined a little late, but did you mention what the price point is for a duplex and a fourplex? Just want to get an idea. So Mahesh, these are single townhomes, okay? At least in the Taylor community. So while structurally some of them may be duplexes and fourplexes, you're not going to be able to get one loan over the top, if that makes sense. You would buy each townhome individually. In the Taylor, they do cost more. You're going to be in the mid fours because it's a Class A neighborhood gated pool very close to downtown. We can look up into Madison and down into Murfreesboro and get into the mid threes. For similar properties, obviously your rent goes down some, but you know where to find me. Just reply and we'll get you pro formas and we can set up a discussion about that. I got a question via email about insurance. And I spoke about this briefly, but I do want to touch on it because we get asked this all the time. When you look at one of our pro formas at Peak and you see that insurance, and this is if it's like a build for rent community of attached townhomes, whether they're platted as townhomes or duplexes or fourplexes, it's the same answer. And oftentimes you may see a figure like $25 to $50 a month for insurance on that. And I always get I get told, hey, that is too low. That is not enough. And I absolutely agree. So what I had said before is in your HOA dues, there is a master insurance policy. A part of your dues go towards paying that. And so the policy that you see on our pro forma that's called out specifically as insurance is what many people would call an HO6 or a condo policy. Some call it a walls in policy. Because the HOA's master policy insures the building, the shell, the roof, the most expensive part, I would say. It's 90% of the insurance that you would normally need if you were to do your own building or to buy an investment property detached, like a single family. But what happens in these attached communities, let's say a hailstorm sweeps through, which it can happen in the South, right? And it just hammers the roofs of these buildings, and now there's an insurance claim. Typically, because of all the nonsense going on in insurance, and it's even worse now than it was 10 years ago, The deductibles for HOA master insurance policies are extremely large. 10,000 is like the minimum. I'm starting to see them have, $25,000 deductibles. So the question is, do you want to get stuck with that, right? Because you've got to pay that deductible for the insurance to kick in. So the HO6 is what does that. It gives you that coverage to get up to the master policy. And it also covers the interior of your unit. There's a little flood in there, something happens inside. That's going to be an HO6 claim, not a master claim on the HOA's policy. That's also what gives you some liability protection, right? In case somebody slips and falls and wants to sue the evil, terrible landlord, that's what the HO6 policy is. So pros and somebody asked pros and cons of Nashville versus RTP of NC. I'm thinking he means Raleigh, and the technology triangle there. And that's a good question. I've viewed the markets as a little bit similar. I know there's a ton of tech happening in that area, but you know what? I have not dived into the demographics or the details. We've looked at it before. Yeah, Research Triangle Park. There you go. That's what I figured. So, I honestly don't know, Chunchi, but I thank you for the question. If we start looking into it, we'll certainly do a webinar on it. But thank you for the question. Um, Do I have to use, here's another email. Do I have to use your preferred lender to get the 4.99 rate? Short answer is yes, because we have a lot of faith in you investors. There is a big check that needs to be written to Fannie Mae to lock down that money at 4.99, right? You're going to have a rate in the low sixes today on an investment property in most cases. And that depends on credit, down payments, a few things, asset class. So there's a big check that needs to get written. And we have such a good relationship with our lender that they write it. And then they get reimbursed at close by our builder or by ourselves, who are depending on who the seller is for the property. So yeah, you can't just show up with a new lender because we don't know what they're going to do. They're not able to write that check. It's a special relationship that we have there to get you that money purchased down at 4.99%. The last one about property management, right? Remember management fees, and we have a company we work with in Nashville on management. They do a great job for us. They've leased a number of these for our clients who have already invested. Typically, your management fee is 8% of the gross rents collected, and you're going to be about 70% of the first month's rent for a lease-up fee. And, I see, especially in the Midwest and the South, management fees, if you just have one property, a manager is probably going to charge you closer to 10%, and they may want the full month of first month's rent for their lease-up fee. So we've got them down a little bit here. That's, pretty normal in other parts of Nashville. And you can see all shapes and sizes and different combos of that managers use to entice you. But just know, yeah, 70% of the first month and 8% ongoing management fee. Great. Well, I told you 30 minutes. We're at 33. If anyone else wants to ask one question, we will indulge. Otherwise, I know you all have busy professional lives, and we'll give it just a moment for another question if anyone wants to pipe in the chat, or I think you can unmute yourselves. Give it a second and see if we can prove that out. Okay, yeah, no problem, Chunchi. Happy to help. Usually what happens when I put out the last call for questions, nobody does it, and I start to wrap it up and they all jump in and say, hang on. So the time for that has passed. We appreciate you all attending. We'll send a copy of this out to the list, and I'll go back a couple of slides so you can have the info on how to connect with us. Invest at thepeak.group, or you can send a message to realestateadvisors@thepeak.group. Easiest thing is just to reply to the email that told you about this webinar. So I appreciate you all attending. You've been very well behaved, and you know what? The construction noise was nothing. They behaved themselves next door, so I'm grateful for that. Thanks again, everybody. Have a great day. We'll catch you in a couple of weeks, probably about the Savannah, Georgia project. Take care.